Hi traders, it's Kristen. Welcome to my channel. Here we are in the morning of Wednesday and another volatile session for the market here as S&P 500 is poised to open at minus 1.4%. Gapping along with it, of course, the Google, the Amazon, Apple, everything is poised to gap down. And ever since this week, in the S&P lost 3% on that day, and yesterday we bounced 1.4% for the S&P 500. But now it seems like S&P is giving back what it's gained yesterday. Technical pivots wise, we want to be focused on technicals for whatever geopolitical is going on. We have to focus as a trader. Our job is to identify the support and resistance. So I want to show you here 30 minutes or 15 minutes into the opening bell. S&P 500 is minus 1.5% right here. And seeing at the pivot here, let's zoom it. At 283.5, let's just put that mark. So here S&P 500 would be at this point. Our low is about 281 for the week. And the S&P 500 is testing this low again. Here, 283.552, hovering on that 15 minutes into the opening bell. And what's interesting about in the last 2 days market session, the price action here, we have a double top at 288 Monday and Tuesday session, and now we're entering to the third day for the weekly session. Still zooming into the daily time frame for the S&P 500 and zoom it for 6 months. This dropped down to 302 to over here at 281 is about almost approximately 6 to 6.5% pullback right here, and then or slightly recovered here from yesterday's price action. But then again, the 200-day moving average is right here at 279, and this was tested Monday after hours, but then that doesn't count because it has to be printed here. Now question here is, where is the market support right now? During market correction, as we can see here from the pattern in last May, that is a process. Nothing like straight flush like here. We have a 4 massive sell-off, 6%, but that was swift. And then followed by this, the 1.4 come back on the S&P 500. It takes process like this. I don't think the market is out of the woods. Yesterday's price action was a technical bounce. So focusing on the technical pivot right here, we do know one for certain, and it's a fact, the 288 is the resistance and the 281 is support. I would use the 285 benchmark right here as my pivot. So basically it means if S&P 500 get over at 285, then I would be neutral on the stock market. If I have short, probably, or I have UVXY, probably trim some. But if S&P 500 stay at 285, right now we are at 283.5.6, then we are likely to test the 281 lows again. And again, if you look at the daily time frame right here, the real support under 20 and 50 is obviously, it's so obvious that it's just impending right here. But the key question is your time frame and how are you going to trade a pullback, whether it's common shares or options. That's another key factor that for only you to execute. So here is the S&P 500, not looking good, bearish bias looking on the daily time frame. And looking at the Amazon right here, this is the prime day. The prime day here, the prime day pop of 2020, 2035, but still continues selling, and now a 200-day moving average. And as Bezos sold almost $3 billion worth of his stock shares, so that's why it's plummeted this much. Amazon is at the 200-day moving average, and as I mentioned on my previous video, that the S&P 500 is technically just following Amazon. Now that the Amazon is in a 200 days moving average, probably the S&P 500 and Amazon technical wise, I don't like that it keeps lingering here. at 200-day moving average, and the market's still very weak and gapping down again another 1.5%. Switching to 60 minutes view here, 1790 is resistance for it, and we are hovering at, let's see here, Amazon and the pre-market at 1767. So we are right here on this big candle pop right here. So if I am trading Amazon, I'm going to be using the 1770 as support if I am long, and then under that, then probably it's going to test the 1720. Let's look at the 30 minutes view for the Amazon intraday. We can see here 1770, and this is the 1760 support. But if it breaks 1760, I don't think the 170 would hold. Probably another intense selling, triggering all the robots algorithms. And switching to weekly time frame, this is Amazon. Double top right here, lower double top at 2080, 2035. And as I previously mentioned on my videos, that what I find it smelly for the market was that the Qs or the QQQ printed a record high, but along with the record high for the Qs, the only thing that followed it was the Microsoft, leaving behind the Apple. The Apple failed to make a record high, so does Facebook and Amazon. So I hope you all enjoyed. I hope you learned something from the video. Thank you for watching my video. Please hit subscribe and hit the notification bell and like my videos, and feel free to comment and would like to interact with you.